Everyone, finally, the biggest REIT IPO in more than 2 decades is up for offer. That's Ntt Reit that holds six assets, four data centers in the US, one in Vienna, Australia, and another one in Singapore. But is it red light or green light for this IPO? Now, for those of you who just finished watching the Squid Game 3, you know the popular song. Maybe? Do you want to sing for that? Kokomate fudisimidas. Okay, then you sing. That's right, ladies and gentlemen. Does it mean it is red light or green light to go for this IPO? This is what we're going to examine in this week's video. So as usual, give us a thumbs up, like, and subscribe to our video. In this video, I'm going to go through three things, as well as a few, maybe three or four things that I don't like about the IPO. Now, the first thing that I like about the IPO is that it's something that screams at you. And for most retail investors, this is one of the most important things. And that is actually it's one of the rare IPOs that offer a very high yield, distribution yield of 7% and more. And they're guiding for even a higher dividend yield of more than 7% the following year. But sit back and think, does a high 7% means that the quality of assets are as good as what they say? Or is that number hiding some other thing? That's the first thing you want to ask. Two is that they have good cornerstone investors, including our own GIC, which is putting in $100 million into this IPO. Well, it's a GIC that basically do not support Singapore stocks, but actually supports, foreign stocks. Laughable? Well, it's for you to decide. But maybe it's also an endorsement that it is a good IPO and hence the investment. Then want a good dividend yield of more than 7% through good cornerstone investors. Third, the thing that's going on for the IPO is its timing. As you can see, ladies and gentlemen, the 10-year bond yield spiked up to more than 4.7%, just recently, only to start to decline, below 4.3%. Now, the pace in which it is declining is actually very reminiscent of how the market's performing. You can see just in my last video, which was actually put up, that I think that the REIT market is going to run and rally. Well, the REITs market has been on fire throughout this week. Hope you have watched my video earlier and caught on and made some money. Now, face of fall in interest rates in the US, that's a 10-year bond yield, is actually reminiscent of what's happening in Singapore. In Singapore, you can see the SORA as well as the 10-year bond yield has actually dropped almost like a ton, from 3% now to almost 2%, and other known anchor investors. The fourth point I like is that it is actually large in the right sector, that is actually in data centers. Now, ladies and gentlemen, data centers are actually a prime beneficiary of cloud and AI computing. And in this chart that the company has shown, you can see that the overall CAGR of AI and cloud has been surging by 16% on the CAGR basis, from 2020 to 2024. But what is even more exciting is the fact that from 2024 to 2027, the CAGR is going to jump, leapfrog by as much as 77%, or on annual basis 23%. So that is something that it will actually benefit on. So, ladies and gentlemen, yes, at GCP Global, we have been advocating that this AI revolution is something that you should not be missing out on. But having said that, in our classes, we have been focusing on three layers of AI. That is actually enabling layer, intelligence layer, and the application layer. Now, let me tell you, the easy money are usually made at the enabling layer. That is, for example, the data through data centers, utilities, power companies that supply the power for data center as well as other infrastructure. But the real money, the one that really monetize your AI, are the ones that are as companies that exist at the intelligence level and the application layer. Now, these are the companies like Anthropy, like OpenAI that do the large language models, including DeepSeek. The companies that do big data AI, for example, like Palantir, other intelligence and security companies like Palo Alto and CrowdStrike. Now, the application layer, we have software platforms, and in our classes, we actually focus on which are the companies that provide the best software companies that actually are using AI enabling chatbots in programs that actually are monetizing it for shareholders, as well as health tech and other platforms. Now, therefore, it is not it's surprising that essentially we are actually focusing more on the Magnificent Seven as well as actually the other companies that benefit from there. So in our classes, for example, now this is actually um, one of the stock that I've told my GCP Global investors to buy 3 years ago. That's actually Microsoft. And ladies and gentlemen, in our classes, as usual, we do not waste our saliva. We put our money where we tell you to. So in this case, for example, 3 years ago, if you look at the quote, this is actually taken from my UBS private banking account. My stake in Microsoft MSFT, my cost price was 282 just 3 years ago. And my market value based on the closing price just yesterday at 491, it's worth 720,000. Now I'm sitting on a profit of guess what? 73%. That's 305,000. Now do not expect this kind of phenomenal profit to actually be bestowed on by entity REIT or any kind of REIT. That's why in our classes, and the next of which is 30th of August, we focus on the companies that monetize AI and are big beneficiaries of AI like Microsoft. So we hope to deliver for you the kind of companies that in 3 years' time, when you look back 3 years ago, oh shit, these are the kind of companies that make the tremendous profit. So do sign up and join us for our next class on 30th of August. If you think we can deliver the multiple profits that we've been delivering for the last 36 years. Kokomate sini simita. Now, in my best-selling book that is actually Making Your Millions in Real Estate Investment Trust, there are actually a list of pitfalls that REITs have been able to deliver. And based on my experiences, in our last 36 years, we actually catch up with all our REITs that we owned. And you can see, ladies and gentlemen, these are some of the lunches and dinners that we actually host with many of the REIT CEOs in the last couple of years. And in our classes, we then update you with what's latest. So one of the pitfalls, for entity, if you actually and highlighted in my books is, and the key thing that you want to question is that, what not to like on entity is number one. Take a look at this. Now, this is a list of clients that entity actually provides in the prospectus. Anyway, the prospectus is only 828 pages. So, do follow our video closely right to the end if you want to save yourself to understand entity, but without reading the prospectus. But it's best that you read it, But one of the things that I don't like is that is like, as I said over here, it's mission impossible clients. So we look through all these data centers. The the top 10 are Fortune 100 US automotive company. The top 3, Fortune 100 US software company. So, which are these companies? Now, the key thing is that, not only is NTT actually disclosing this or not disclosing it, the likes of other REITs in Singapore, for example, Digital Core REIT, MIT, do not disclose who their end clients are as well. Now, this is something very iffy, ladies and gentlemen, because if you look at digital quality, look at the chart. This company has crashed and burned. Literally, based on its IPO price, the stock is down. Walloping. A couple of years ago, one of their key clients, Sangha, basically were unable to pay and almost filed for Chapter 11. It took a long time before shareholders were actually informed, of such a thing. Whether there was a lapse in corporate governance, of course, the company does not do, deny that. But essentially, what I'm saying is that when the clients of data center REITs default or delay in payment or have problems in paying, you as a shareholder is probably the last to know. Okay, One, you do not know the identity of this end client in the first place to begin with. Two, you don't even know how much do they constitute in terms of total profitability. And many of the REITs are actually quite bad in terms of delivering and engaging with investors. For example, my own experience of digital core REIT is that it's one of the worst investor relations. A lot of investor relations of this REIT, digital core REIT, is much left to be desired. Gomagomegisimita. Well, the next red light that's flashing, as I've highlighted in my bestseller, Making Your Millions in REITs, is this. Look at this chart. This chart looks very interesting, because it's described in a prospectus that robust capital structure of entity. It means that, if they increase their leverage to 40%, they can still borrow 131 million. Big deal, ladies and gentlemen, because for data centers, if you look at NTT, there are six assets. The biggest is $354 million US, right? And even though we have a 60% financing, you can see that 40% bridging of the 40%, can be done very easily because in terms of equity side, they only have 131 million to lean on, or rather in terms of to borrow. So essentially, ladies and gentlemen, this is a REIT where the capital structure is such that if they make any acquisition, it is most likely it will already exceeded the 40% bridge level. So it is not the bite-sized kind of acquisitions. So if, as usual, the acquisition is always good, as what most REITs will try to sell Koyo to you. But the key thing is that if they come to you to ask you for money, to carve out whether it's a preferential rights issue or diluted place. The next point I want to highlight to you, ladies and gentlemen, is this. Okay, what not to like on this REIT is that, wow, they show you this chart in the prospectus. They say that data center assets are the best performing assets in the last 3 years. Yes, ladies and gentlemen, nothing that new to us as investors. In fact, we like it. But if that's the case, then why not list your IPO in the US rather than Singapore? Other than coming for GIC's money, is there any other reason? Well, let me just tell you that in the US, there are only two data centers. That's Digital REIT and Equinix. And by far, these two REITs are far, far bigger in terms of market cap compared to Ntt REIT. So not surprising, they have chosen Singapore to list. The next point to be aware of, ladies and gentlemen, as a REIT light, is that it is a Japanese REIT. Ladies and gentlemen, having the only REIT listed in Singapore that is Japanese in nature, is actually this company called Daiwa House Logistics Trust. And again, if you look at the chart since it's listing, it's also another REIT that has crashed and burned. That's down 30% from its high of almost 88 cents. And for investors since IPO, they have never seen back the IPO price for a long, long time. Now, let me tell you, Daiwa House Logistics Trust. Again, I have problems, with the investor relations because it's one of the companies, that don't seems to get it right and don't seems to actually have leave much to be desired in terms of the investor relations. Now, I certainly hope that Ntt REIT will not go this way, but I certainly am not hopeful in this perspective. And the last part of this video, ladies and gentlemen, is that I want to show you, are there better data center alternatives for you, the investor, to be investing? Well, the answer is simply yes, because if you look at the valuations, of the REITs in Singapore, the likes of Capital Land, Ascendus REIT, Maple 3 Industrial Trust, Capital Land Ascendus India, Capital DC, and Digital Core, you actually have three other alternatives. That's Capital Land, Sanders MIT, and Capital Land Sanders India as better alternatives to invest because in terms of the yield, they're not too far away. We're talking about less than 50 basis points in terms of the distribution yield from the 7% that NTT is actually offering. Secondly, these companies already have been listed as REITs for a long time, so you can see the capability of the management progress as well as the ability to be able to manage and deliver for the REIT. Now, if you look at the average of all those five REITs, they deliver 6%. in terms of dividend yield. But if you actually take off the outlier, in this case Capital DC, which is offering the lowest of the REIT in terms of the yield, simply because of the quality of its assets within its portfolio. So average of data center REITs ex KDC, they're offering about 6.5%. So we're talking about only a 50 basis points difference. So do you therefore actually take a bet with some of the better names, for example, like Capital and Sanders, MIT, which I've showed in my last video, or do you want to take a punt, with this newbie entity? Well, do let me know in the comments below. But if anything, ladies and gentlemen, remember last week I showed you MIT breaking out, of the share price at $2, and now MIT has surged further. Now this week, as I've basically shown in my video, you take a look at this chart. Now after almost 9 months, close to 250 trading, capital and the center seems to be breaking out, of the 273 range that you can see. So that range, as you can see, is looking positioning well for the REIT. So till then, for the next video, let me know your comments and do join us for our class if you can.